Hey guys, what's up? My name is Ayush Khanna and you are watching our channel Ayush Khanna Classes. Now today we are gonna start CMA Intermediate last papers, company accounts and audit. I'll be teaching only company accounts. Now let's start. Firstly, we are gonna start with the study note number one, accounting for shares and debentures. Mostly topics are covered in plus two company accounts. I hope you know all the topics. You know treatments of issue of shares, forfeiture, sector, etc. And this lecture is also applicable for the CA Intermediate paper number one, accounting also. Okay, this lecture is applicable for both the CA Intermediate and CMA Intermediate accounts. Now let's start. We are going to start from accounting for bonus shares and rights. First topic of the study note is of bonus shares. Now let's start. The governing section, as you can see, the underlined portion. Uh, the governing portion, the governing section of bonus shares is section 63 of the Companies Act 2013. Okay, I hope you are doing the corporate law side by side. Okay, now let's start. If any company issues bonus shares, then it will be made out of the company's reserves and surplus without any further investment. Without any further investment, how the further investment is like. Uh, like issuing more share capital, demanding more investments from the public. Okay, these shares are also known as capitalization of profits or free shares. These are also known as capitalization of profits because it is provided by the company to the public for free. Okay, for free. Now let's take up with the next part. Falling reserves shall be capitalized. For the issue of a bonus shares, we have to capitalize the certain reserves. These reserves are first CRR, that is capital redemption reserve. Capital redemption reserve. Second is SPR, the securities premium reserve. I hope you know it. And third is a free reserves, so like a general reserve, profit and loss account, etc. Okay. The next point is that as per the provisions of the bonus, as per the provisions, bonus issues cannot be made out of unrealized profit or gains. That is unrealized profits or gains. It means that the bonus issue cannot be made out of non-cash reserves. It can be only made from the following reserve. It cannot be made out of non-cash reserve. What are non-cash reserve? Revaluation reserve, securities premium is realized as on a cash consideration. Any profit on sale of plant and machinery sector. Okay. As per the Companies Act 2013, free reserves are the reserves which are available for the payment of dividends. So, capital reserve cannot be considered as a free reserve. So, capital reserve cannot be considered as free reserves. Free reserves are the reserves which are available for the payment of dividends. Okay, capital reserve are not cannot be considered as free reserves. It can also be said that bonus shares cannot be issued out of capital reserve. It can also be said that bonus shares cannot be issued out of capital reserve. It can only be issued out of capital redemption reserve. Okay, I hope you got the difference. Now journal entries we are going to talk about. At a time of issue of bonus shares, first entry shall be a capital redemption reserve account debited, premium, that is securities premium reserve account debited, general reserve account debited, profit and loss account debited to bonus shares account. Okay. As you know that the shares are the are shown in the liability side of the balance sheet of the company. So the liabilities side are always credited. So bonus shares are also credited. Then we have to transfer the bonus shares to equity share capital, only and only equity share capital, and not to any preference share capital sector. Okay. Now let's take up the second entry. Bonus shares account debited to equity share capital account. बोनस शेयर्स अकाउंट डेबिटेड टू इक्विटी शेयर कैपिटल अकाउंट. सो इधर मैंने डेबिट लिख दिया. आई रिटन हियर डेबिट बाय मिस्टेक. Being bonus shares issued, you have to write the narration at last. It's very important to write the narration for scoring good marks. So if the examiner can cut your marks if you do not write the narration. Second thing, CRR, premium, general reserve, and then profit and loss. In this way, we have to issue bonus to shares. So we cannot change the and we cannot change the positioning. We cannot put profit and loss account first, then premium, then general reserve, then CRR. We have to follow this pattern only. Why so? Because the Companies Act says so. Okay. Now, from your respective study material, that is CMA intermediate and CA intermediate, you have to learn one topic, or in law you must have learned about it. That is how bonus shares can be issued. What are the provisions for the issue of bonus shares? Okay, you have to read that. I'm gonna take up a sum right now from a CMA Intermediate's book. See, the sum is illustration number 13. I hope you have your study material in front of you, with you. Following are the items that appear. Following items appear in the trial balance of M Limited as at 31st March 2015. 60,000 equity shares they have given us of rupees 10 each, that is 6 lakhs. CRR 45,000, plant revaluation reserve of 15,000, SP account 52,500, general reserve 1,50,000, profit and loss 75,000, capital reserve including 37,500, being a profit and sale of machinery 1,12,500. Normally, capital reserve is not taken for the purpose of issue of shares, bonus shares, but we're gonna take only the profit on sale of machinery in this. Only on profit and sale of machinery. Okay. Now let's start with the entries. First entry. Capital reserve account debited. Logically it does not come, but the study material provides it, so we're gonna do that. 37,500. Then capital redemption reserve account. How much was the capital redemption reserve account? 45,000. So the most important line: the company decided to issue bonus shares to its shareholders at the rate of one share for every 4 shares. At the rate of one share for every 4 shares held. See, uh, we have a share capital of rupees 6 lakhs. He said one for every 4. So here's the calculation for the bonus shares. That is 1,50,000. Okay, this is the calculation of bonus shares. In this way, we have to calculate. Capital redemption reserve is of rupees 45,000. Then plant valuation reserve is to be ignored because these are not used for the capitalization purpose. Securities premium account 52,500. securities premium account 52,500. Now let's calculate this. We need total of 1,50,000 of bonus shares. 37,500 plus 45,000. It comes out to 1,35,000. So we need 15,000 more. 15,000 more. So out of general reserve, we are gonna take it 15,000 piece. General reserve account 15,000. 2 bonus shares 1,50,000. Being bonus shares declared. Second, bonus shares account debited to equity share capital. Being bonus shares issued. This was the sum. A very small and easy sum. 1,50,000. Okay. Now let's take up with the illustration number 14. This was illustration number 13. Okay. Here's illustration number 14. This question is also in this in CA intermediate study material. Please refer that also side by side. Following is the extract of the balance sheet of YY Limited as at 31st March 2015. Okay. Authorized capital we have given with issued and subscribed share capital 12% shares of rupees 10 each fully paid up. 1,35,000 equity shares of rupees 10, rupees 8 paid up. Whenever the shares are not fully paid up, firstly we have to pass the entry for the fully paid up shares. Then we're gonna do the treatment further. Okay. These are the things. These are the free reserves given to us. Let's see the following para. On 1st April 2015, the company has made a final call at the rate of rupees 2 each on 1,35,000 equity shares. The call money was received by 20th April 2015. Thereafter, the company decided to capitalize its reserves by the way of bonus shares at the rate of 1 share for every 4 shares held. 1 share for every 4 shares held. Securities premium 37,500 include a premium of 7,500 for the shares issued to vendors pursuant to a scheme of amalgamation. So we are going to take only 30,000 rupees of securities premium reserve. Capital reserve includes 60,000 being profit on sales of plant and machinery. 20% damages are convertible into equity shares of rupees 10 each, fully paid up on 1st June 2015. Okay. See, it's very easy sum. I was thinking that I should show the solution, but I'm gonna solve the question. Now let us start. Show reserves. Show necessary entries in the books of a company and prepare the extract of a balance sheet immediately after bonus issue, but before conversion of debentures. Also, are the convertible debentures holders entitled to bonus shares? See. I'm not solving the question. I'm just showing. It's a very simple sum, a straightforward sum. See first, equity share capital to equity. Sorry, equity share final call account debited to equity share capital account. Basic entry. Then bank to equity share to equity share final call 2,70,000, 2,70,000. Then after that the bonus shares are issued. CRR 30,000. CR relies in cash, that's 60,000 amount. Securities premium account 37,500 minus 7,500, 30,000. General reserve 1,80,000. Profit and loss account 37,500. Two bonus shares, being bonus shares issued, being bonus shares declared. Then bonus shares to equity share capital 3,37,500, 3,37,500. It is calculated on 1,35,000, 1,35,000. Okay. Now here's the balance sheet for you. Share capital. Let's see. Notes to accounts. We're gonna see it. Authorized the 1,87,500 equity shares of this 10 each. How it is calculated? That equity that the bonus shares of 33750 3,750 bonus shares plus the existing share capital. Okay, 1,68,750 equity shares by the way of bonus 168,7500. Then 12% debentures of rupees 10 each 1,20,000 or 18 lakh 7,500. CR 1,12,500 minus 60,000. Okay, 60,000 has been utilized. 52,500. Securities premium reserve account 7,500. Surplus, that is profit and loss account 2,70,000 minus 37,500 comes out to be 2,32,500. The total of reserves comes out to be 2,92,500 rupees. Then long-term borrowings. Uh, Secure 12% convertible 150,000 debentures of rupees each are converted into 50,000 equity shares at the rate of rupees 10 each. वगैरह 750,000 बस. Then here are some notes. I think it's a very easy sum. Very easy sum. You can solve it. Okay. Now let's take up our bonus shares topic is completed. Okay, you have to just solve the question. Then right issue. I'm going to talk about accounting for the right issue. Here from the book only, all of you can see from that. See, here's the right issue. When the company having share capital proposes to increase its share capital by the issue of further shares, such shares are offered to a person who at the date of the offer. Yeah, this please read this very basic question. How to value how to value the right shares. Now I'll be explaining you through an illustration. Illustration number 12. A company is planning to raise funds by making right issue of equity shares to finance its expansion. The existing equity share capital of the company is 50 lakhs. The market value of the shares is rupees 42. The company offers to the shareholders the right to buy two shares of rupees 11 each for every 5 shares. 2 for 5. Okay, you are required to calculate the theoretical market price of the right issue. And let's take with see illustration number 12. Illustration number 12. Theoretical market value 5 shares for 42 and for rupees 11 2 shares with divided by 5 plus 2 because 5 is required for every 2 or 2 for every 5. We have to add the both market value. We have got how much It comes out to be 20 plus, sorry, it's 42, I think. 42, 5 into 42 plus 22 divided by 7. This comes out to be approximately 33.14 rupees. Then they have said to calculate the value of right shares, value of rights. Value of rights is rupees 42 minus rupees 33.14. That comes out to be 33.14, 8.86. Then they have then they have asked to calculate the percentage increase in share capital. Percentage increase in share capital is 2 by 5, because it is 2 for every 5. Okay, and 200. How much? 40%. Or you can calculate in any other way. The way given in this the way given in this question is 50 lakhs into 2 by 5, 20 lakhs, then it is 40%. Okay, I hope you got it. In the next lecture of company accounts, we are gonna deal with C. We are done with the right issue, bonus issue. Issue of shares is a very basic chapter you can do by self. Sweat equity shares, very basic chapter you have done in previously. If you want, then I can put lectures on this also. Then buyback of shares, we are gonna do both 1.7 and 1.8 would take one lecture each, not 1 to 2 lectures each, not very much. Then underwriting of commission, then underwriting of shares and debentures. It's a little bit of typical topic, so we're gonna take it at last, not after that. Then presentation of financial statement as per schedule 3, very easy chapter, but the sums are too lengthy. Okay. Then cash flow statement you have done in class plus 2. In 12th grade you have completed it. If you want, then I'll put the lectures on this also. And then accounts for banking, electricity and insurance company. Then I'll be teaching you this only. Okay. Then accounting standards. Small accounting standards are there. AS 11, 12, 15, 16, 17, 18, 19. Okay. Accounting for leases. In AS 19 accounting for leases, some changes are going to be made. So I'll be putting accounting for leases on hold. Okay. AS 19. The discussion is taking place in the Institute of Chartered Accountants of India. It's a very important topic. Uh, the members, the council members, NAFA sector are arguing there about the changes. As soon as the changes are there, I'll be putting up a lecture on that also. Okay. Okay. I hope you got it. If you like my lectures, then share, subscribe with your friends. Thank you.